what is claims-made coverage and why is it important? So on a certificate of insurance, you're going to see a little box that says this is either an occurrence policy or a claims-made policy. Basically, the provisions of a claims-made policy state a couple of things. One, the loss needs to occur during the policy term, standard, right? But also that the coverage must be in force when the loss is reported. So why this is really important, if you can imagine, if you are an accounting firm, for example, and you make a mistake, that mistake may not be discovered for several years. So even though coverage was in place at the time that the mistake was made, if you have since canceled coverage or gotten coverage with a new carrier, that coverage would not be covered by that carrier that provided coverage when the loss happened. This is why retro dates, otherwise known as retroactive dates, are very important because they pick up coverage from old policy terms or from before the current policy term. That is also why tails or extended reporting periods are very important. That's what extends the reporting period for claims and losses to happen on a professional liability, errors and omissions, general liability policy. So these are really important terms. If you have a claims-made policy, please talk to your agent about what that means and ask specific questions like, what if the loss happens on July 1, but we do not figure it out until January 1 of the following year? How would that be handled? Because as the coverage limits change from year to year and retentions or deductibles change from year to year, those also change how those are applied. So be sure and talk to your agent about it. Thanks.